What's up, everybody? Happy Hump Day, and welcome to the Wednesday edition of Ninjacators' new weekly live event called Profits at Noon. I see we already have a good little crew coming together here in the chat or in the participants list here in Zoom. So it's great to see all of you, Adnan, Hal, Mohammed, Neil, Richard, Scott. It's great to have all of you here with us today. Quick shout out if
Hello,
you're
everyone.
joining us. Oh, sorry, Richard.
No, just saying hi.
Quick
It's
shout
not my
out if you're
turn, but I like saying hi quickly.
You got to be quick because I don't leave a lot of room. I'm just
Yeah.
Quick shout out to our crew over on YouTube on the simulcast. I see For a Reason is back with us today. It is great to have you. I hope you are well and having a nice week. If you were with us on Monday this week, obviously we'll be following up on the levels to lock, the analysis there. So I see we are now 2 minutes after the hour, so let's go ahead and fire things up. I will quickly give you a recap if you're new to these sessions. These sessions, obviously called Profits at Noon, we're live 3 days a week, Mondays, Wednesdays, and Thursdays, all at noon Eastern Time. The objective here is for us to show you the levels that we are stalking in the markets. We're going to show you live analysis across 6 of our favorite futures market, and we're also going to be showing you what we call our levels to lock. So in addition to all this great live analysis you're going to see, we're giving you actionable levels you can copy and stalk along with us. And we do, of course, encourage you to stay with us in the action and to see how it all plays out. So that's where the follow-up sessions come into play. As mentioned, we have one more live session on deck before we close the week tomorrow at noon Eastern Time. So we hope to see you there. Also on deck next week, I will quickly mention we do have a tool spotlight coming your way. We had a request come through on YouTube Monday for that. So lots to look forward to next week. My name is Nate. Co-hosting these sessions with me is our very own Richard Krugel, or as I like to call him, King Richard. So King Richard is in the house with us today. He is locked and loaded. He is frothing and a foaming and ready to show you today's levels. So before we get started, I do see we had a quick question coming through. Scott, actually, on my notes here, what was the name of that tool, Richard?
It's the dynamic supply and demand tool, I believe.
Dynamic SR Zone. Yes, there we go. Because I know we have 2 of them. Just want to make sure I have the right one. So that'll be the dynamic support and resistance zone indicator.
That's the one.
Tool spotlight next week. So if you have any requests, by the way, Scott, since you're here with us, if there's any of our Pro series, any of our tool suites that you're curious about, or maybe some that you own and you were looking for some tips on using or optimizing, and this extends to everyone, feel free to fire away in the chat. We will be happy to add those to the queue. And of course, I will also just mention we'll make sure there's room for Q&A here today. So I'll be checking in again a little later in this session. But yeah, as mentioned, we're going to hand the reins over to Richard Krugel now. He's going to get us started with today's analysis. Richard, to you, sir.
Thanks, Nate, and welcome, everyone. Thanks for tuning again. As always, before we do get started, just a quick disclaimer. All information in today's session is provided for educational purposes only, and it's not an offer or recommendation to trade futures, stocks, options, or Forex. All right, I'm just going to disappear off screen for a little while I do the analysis. Let's get rid of that blinking PowerPoint slide there, and here we go. All right, I'm on crude oil, should be on ES. Okay. So the ES is moving a little bit lower. Found resistance. It's trying to get above this angular line. This is the line I drew in for you guys yesterday. Remember, I think for a little while now, we've had, since last week actually, this channel that I've drawn in here. This is from this low over here that we marked as a 4th wave, more particularly an expanding triangle, a 4th wave that I believe ended over here. Again, just as a quick recap, this is not in the way bigger picture sort of scheme of things. We've just been tracking this move to the upside sort of around mid-March, labeling that as a wave 1, a 2, a 3, and then we had this expanding triangle. We were actually watching sort of the end of this live during one of our sessions, and then price moved back to the upside again. Now, one of the reasons I drew in this channel is because it does look like we're getting these sequences of 3 waves to the upside. Now, that sort of looks to me that this might be tracing out as some sort of an ending diagonal or a diagonal pattern to potentially finish that 5th wave. Now, when that's going to be done, can't really tell you. Maybe I'm completely wrong about this, but there is some clear evidence that price is following this angle of ascent in this channel that I've drawn on my chart. You know, although we have an upper channel line, a lower channel line, and a center channel line, quite often if you use the same angles as that channel and project them from previous lows or highs that fell, you know, didn't reach the upper or lower channel, then quite often you find support and resistance at those same lines. Even these instances before where I've done the same thing, just took a ray, copy and pasted at the same angle as a channel, projected from this high over here. That was the last high prior to this fourth, or the last decline before that fourth wave ended, in my opinion. And prices now, as you can see, respecting that really, really well. It's been trying to break above it. It has actually, but it failed to close above it. Today, it actually reached it again, almost made a bit of a double top. With I think that was Sunday's opening high. And price moved lower. We found a way again, support at that channel line moved up. So we're in a bit of a sideways upwards sort of grinding phase here. That being said, if this is a 5-wave or a 5th wave that we're dealing with here, and like I mentioned, a potential diagonal pattern, we're going to have waves of 3s, like we can clearly see here. Well, that's what I'm thinking. Could be wrong, obviously. For a wave 1, a 2, and another 3-wave sequence for potential wave 3. It might have ended, might still be moving higher. Then a decline, and then another 5th wave to the upside potentially. Then ending this 5th wave, and then potentially getting a much deeper retracement that could retrace a decent portion of this phase that we've been tracking to the upside. So that's sort of the idea from, let's say, an expectation sort of standpoint. Let me just mark that properly. I'll just get rid of this. So that's the idea. I've been saying for a little while now that we could potentially start seeing a decline, similar to what we've seen over here. So if this was the first wave, second wave, we might get a correction now before that last final 3-wave sequence moves to the upside. If we do see a break below this upper channel line and a close below it, then I think that for me, at the very least, will be a good indication that we're going to see prices move lower. Not potentially breaking these lows, but a decent retracement against this move to the upside. So price has been above today's pivot point at 4,285. For most of the day, it reached R1. R1 was at, what was that, 4,301. And that's sort of in line where we have this upward sloping channel line, or should I say it, angular resistance that's acted as resistance 1, twice, and 3 times now. So quite often, if you want to sort of judge direction, I'm sort of like in limbo here. Should I be long or short, whatever the case might be? I do think that if we get a break below S1 today at 4,275, could be today, tomorrow, or just watch this upward sloping channel line, we get a close below there, that might be a good indication that the next move lower, which I will treat as a correction, has indeed started. All right. So price might just be doing its thing, bumping up and down here the whole time. We might still make another move to the upside. But for me, as long as price stays between this upper sloping angular line, this one over here, and this one here, and while it stays and bounces around there, I'm sort of a bit neutral on the ES. But the expectation is that we might see a deeper correction to give us this wave 4, and then another 3-wave sequence to complete that 5th wave in the bigger picture sort of scheme, and then get a potential correction to the downside. All right, so that's the idea on the ES. Just really, again, very cool to see how these market geometry lines sort of contain price, how they act to support and resistance, quite often also track price. And if you want to like judge which direction the market might go, you want to see price sort of confirm that it breaks it. And if they do break it and then find support, like, for example, in this instance over here, then you can sort of say, like, yeah, where's the next median line? We might see then a move downwards. In this case, not a median line, sorry, a channel line. So expectations would be that if we see a strong break, like I've said a few times now, of this line to the downside, that we might see a deeper retracement. Same thing on the NQ. We've been expecting a deeper retracement for a while now. That being said, for those that are new here, I've had a pitchfork on the NQ. Let me just scrunch up that cost chart a little bit for you guys. Drawn here from also mid-March to this high around end March to about this low, when was this, nearly towards the end of April. This is a shift pitchfork. I've just been using that setting because I believe this one's contained price the best, while obviously the NQ has been skyrocketing to the upside. We had a previous instance where price almost reached this upper red warning line. It fell short of it, pulled, let's say, strong trending markets, not the ends, but quite strong support resistance, depending what direction you want to, or the market's been moving into that area. So with a strong decline now, it begs the question, you know, are we just correcting lower? I think we might see a support step in again, maybe even at S3, where the NQ will be that weak to reach it today or tomorrow. We'll obviously have another session tomorrow and see where S3 is and where our projected levels are as well. Quite often they do line up with some of these market geometry lines, giving us a bit of a confluence area, and that quite often acts as very strong support and resistance. So should price reach this area over here, again, today or tomorrow, it'd be interesting to see if we see a break of that. If we do see support either step in here or actually reach here and then go up, expectation is that price could still at some time reach this upper red warning line and then potentially then get that deeper decline. Sort of looking at the same thing on the NQ as on the ES, expecting that we could at some stage see a deeper decline to the downside. And that would be the same for the YM, the ES, and whatever, all the indices. So price found a little bit of resistance at R1, not a little bit, it actually went above it. Moved lower, broke below today's pivot point, just blasted through S1, our projected range low. It's already below S2. So our next level of support could be today's low deviation projection at 14,398. So that being said, it does look like price is heading towards this upper median line again. It's just very also cool to see our market geometry here again has been acting as support and resistance. And quite often in this case, should we get a strong close, where's the next area of market geometry? And that could potentially be this upper median line that price is gunning for. Right, that brings me to the YM. Be noting that since this high here mid-April, well, not actually that high, I'm completely wrong about that, around about end of April, beginning May, that we've potentially seen a double zigzag pattern to the downside. That being a very short-lived ABC potentially, an X wave, and then a little bit of a long drawn out ABC, a secondary ABC. So double zigzags, basically two zigzag patterns after each other. Price pulled right into 61.8. I was mentioning that 61.8 quite often, as you all know, could be an area where a correction might end. And that was just the 61.8% retracement from these lows around mid-March to that high in the beginning of May. All right, so I'm viewing this as a double zigzag to the downside. Found support, moved all the way back up. This line I had here was actually an old pitchforks warning line. And you can also, I just pulled it in there because it was, my charts were way too cluttered to actually see what's going on here anymore. But you can even see our price pulled back into it and got rejected, and it's now finally broken above that again. So I'm viewing this now as potentially the next move higher in the YM to potentially challenge or go above these highs around about 34,363. So bullish on the YM. That being said, I'm still bullish on the ES and the NASDAQ. Like I said, I just want to see what happens with price being at these strong areas of support, or these angular areas of support, and how they react when they actually reach them. NQ still has to reach that line. The ES is at it already. But in the long run, still expecting higher moves to the upside, but also just being very cautious that we could get a deeper decline. If that does happen, you know, I'm still just going to treat that as corrective in nature. So since this move to the upside, we've already seen a three-wave move. Maybe this is end of a correction. Maybe it's still busy, whatever the case might be. But if we see another break above this area, that would count as 5 waves for me, which would mean that I think the probability would be raised significantly that this was actually the end of a WXY or double zigzag. Right. The Dow's been above today's pivot point for most of the day at 33,580. Previous 4-hour candle reached the 33,712 level, which is today's R1. It's just tested it again. So if we see a strong break above here, we could potentially see a move to 33,809, which is today's R2 level. And we have a projected range high 33,915. Now, again, we don't know if markets are strong enough today to do that, especially with the ES and the NQ moving lower a little bit. But again, we might still be busy with a correction here, but still also expecting more upside on the YM. So watch these levels. R1 at 33,712, a break above there could be bullish towards R2. But in my opinion, if we break below today's range around 33,538, that might indicate that this correction, the way I'm treating it as a correction, is still in the way that we might see S1 reach, potentially even S2. Right, it brings me to the Russell. For the longest time since we've started these sessions, the Russell's been in this crazy up and down volatile range. At some stage I was thinking maybe this was a triangle. Clearly now just looks like a range. Finally this week price broke above that range. Was it this week? Yeah, and has since moved pretty strongly back to the upside. So I'm treating this as bullish as well. I don't know, Russell's not really one of my favorite markets to trade, but one should assume that if this was some sort of a very crazy looking correction, that price could be heading towards new highs again. Let's quickly look at our levels to lock. Price closed opened way above today's pivot point at 1842, blasted through R1. It's now struggling a little bit here. Today's projected range high at 1897 spot 3. So that's already a pretty significant move here on the Russell. So yeah, if we look at where this whole entire move started from, potentially have a strong one, very sharp 2, maybe price still building its way to the upside. Again, we'll recap things tomorrow, see where things are at with the NQ and also the ES moving lower. It might drag the YM down. Russell, obviously, a complete different market, but bullish in my opinion. For as long as price stays above this upper limit of this insane range that it's been in for quite some time. All right, that brings me to gold. A very sharp decline on gold. For those that are new here, we've been tracing out a following a 5-wave sequence to the upside. Price broke below a lower channel line. At that stage, it was my opinion that we're going to see a deeper decline. That did happen. Now the question is, with such a strong decline, is this just the beginning of a larger correction? I do think that is the case. We have a clear evidence of a first wave, a second wave. Now, we were saying potentially a 3, a 4, a 5 ended here, that we're going to see a deeper move or bounce to the upside with another decline at a later stage, another 5-wave sequence. But I've also mentioned yesterday, it could potentially also be that we've seen a 1, a 2, and this was actually our 3rd wave, a very sharp 4th wave, and now some sort of final 5th wave, and then at a later stage you move back to the upside. So it looked all pretty cool for gold earlier this morning. When I've actually looked at the markets, doing a bit of prep for tonight's session, price opened above today's pivot point at 1977 spot 7. Couldn't stay above R1 at 1985, and look, now we got this very strong decline. So should price break these lows, it looks like it's heading towards today's projected low deviation, which is at 1953 plus minus. We're probably going to see a break of these lows over here. probably, I won't say definite, but obviously price came very close to reaching that low. Maybe this time around it will break it. But that would be the expectation, that if it does, that we could still at some stage see support and get a deeper correction, counter this entire move to the downside, making this potentially a wave A, a wave B, and then a wave C at a later stage. All right, so it might be at the sort of ending part of this initial decline to the downside. Right, that brings me to crude. Well, actually, I wanted to do something on gold. I don't know why I didn't draw that. I did say I'm going to draw and slope a pitchfork into the direction of this decline. If this was a wave 1, I want to go from the start of it to the second anchor point and then to the third anchor point over here. And here we've got a shift pitchfork, and for me that is sort of been containing price really well as well. So maybe if you want to draw a shift pitchfork, you like market geometry, you might want to do that on the August contract of gold, going from that high that we labeled as a wave 5 to the significant low here. First anchor, second anchor, third anchor, and change your settings to a shift pitchfork. Also really cool here, quite often if you get areas where price moves above a pitchfork line, it could be a pitchfork or it could be a channel, then I very often would draw a ray parallel to the angle of these median lines and project it from those previous highs. Price broke a little bit above it, but one could argue that sort of acted as resistance now and stopped this move in its track. We're seeing one hell of a decline at the moment. Yeah, so price already busted through S1, S2, and like I said, potentially moving towards S3 and the projected low deviation, the first deviation. Okay, so looks like we just have to stick with the bearish side for the time being, but again, might see a deeper correction to the upside or bounce to the upside at some stage soon. That brings me to crude oil. Beginning of this week, Saudi Arabia said they're going to cut production. Prices opened up, way up here, immediately reversed to the downside, found support, when was this, yesterday, and started making this move back up to the upside again. Here also got a channel, just basically from this low here to this low towards the end of May, to these previous highs over here, sort of around the 10th of May. And you can see we've had support at the center channel line. Price today has actually reached that, and it looks like it's potentially going to break above it. This is one of those scenarios that if price were to break above it and stay above it, that might mean that the low is already in, that we could potentially be moving towards new highs in crude oil. New highs, what I mean by that is that I'm treating this entire thing as potentially corrective in nature, regardless of what the Saudis have said, all right? So, obviously, could be wrong about it, but just the behavior of this pattern doesn't look very, how can I say, impulsive in nature, if that makes sense. Just a lot of mess, and quite often that is a great indication of all of this being corrective in nature. Now, if all of this is corrective in nature, one's got to ask the question, we were around about this time here at the end of May, thinking this was the end or close to the end of an ABC. Price failed to break this low. And as I always say, if you should always, once you get a correction, the most common correction is a zigzag, an ABC, whatever you want to call it. Now, if you're wrong about that, you see a decline, you're just like, oh yeah, I'm right about this ABC thing, and price fails to break below an area where you believe this correction started from and find support in this case, and then move to the upside, then my second go-to pattern is a double zigzag. So basically two ABCs. So ABCX, ABC potentially to end this correction, and then potentially another decline. So I'm quite bullish on crude oil. Obviously, I have to see how things pan out. I think if price were to stay above by the end of today's trading session, maybe by the end of tomorrow's trading session, or maybe even this week, above this line, that we could potentially see a challenge of this, and then that would, for me, then sort of make this double zigzag idea, how can I say, rather plausible, if that makes sense. So for as long as price, stays below this low here or this high here, I might be completely wrong about things. Price might just reverse lower, and that was the end of it. But just for the sake of what my bias is, bullish on crude oil up into around these areas, unless price obviously, declines strongly to the downside again, then obviously something else is going on here. So yeah, already broke above today's R1 at 72.48. I want to see how it's going to handle the center channel line, and it might be making a move towards R2 and today's projected range high, which is all around about the 73.50 handle. So that's definitely a possibility. Whether that's going to pan out or not, let's see. We'll obviously have another session tomorrow, see where the market's at, and see how these projections panned out. That's pretty much it from the analysis side, guys. If you've got any questions, please don't hesitate to ask. I'm more than willing to help you guys out with that. Anything I can help with. If you've got any questions about market geometry or the analysis, then please shoot it there in the chat box.
Sure. Thank you so much, Richard, as always, for the detailed analysis, the valuable insights to help us navigate the quagmire of price action that inevitably lies ahead. As Richard mentioned, we always like to make time for any Q&A here in these sessions. So whether you're here with us in Zoom or if you're over on the simulcast on YouTube, we definitely want to make sure we have room for any questions you might have. So whether that pertains to the analysis, our levels to lock today, anything generally about these sessions, we are more than happy to dig into it with you. In addition to that, of course, as mentioned earlier in this session, we're also happy to take a look at any requests you might have for future tool spotlights. And then depending on how froggy Richard is feeling, he'll also take an analysis request or two when we have the time. So if any of that's on your mind, again,
absolutely,
feel free.
We've done this in the past. It's really cool. If I think it was the 10-year treasury notes, that was it for a reason. Wanted to have a look at that.
Mm-hmm.
I did give a brief analysis on that. So I don't just do analysis by pulling up a chart. So if you got a request, I'll actually go and spend a good half an hour on it prior to the session, and then cover it in the next session. So please feel free that if you want to have me look at any other market than the ones we're looking at here, then by all means do that. Just keep it with the future side of things, though. I don't have data for the stock market.
Sure. Yeah, we do have a limit with the stocks, but anything futures, we're happy to take a look at. As Richard mentioned, it's not something he's just going to phone in. He's really going to take a deep look at it. He's going to treat it the way he treats any of his other analysis, any of these other charts. So it's really a great opportunity. But it looks like everybody's a little quiet today, a little quiet Wednesday, which, that's not a problem. I do want to quickly note, if you have any questions after this session is over, if anything comes to mind, we are, of course, happy to take any emails, phone calls directly to our support team. So if you head over to our website, there's a contact form, our email address, support@Ninjacators, as well as a phone number plastered all over the website. So our crew, our support ninjas, always happy to help if anything else comes up. But it looks like we'll likely be wrapping up for today's session here in just a minute, cool, unless anything else comes through. I know Richard's got a doggy door to install. I have a 12-hour road trip to get to officiate a wedding this weekend. So lots going on. Awesome. Yeah. Cool. Well, it looks like we're content. We're sated for the day. So good job, Richard. Again, thank you for your time. Thanks, the valuable analysis and insights. And then, of course, thank you to everyone that joined us today here in Zoom over on YouTube. Thank you so much for your time. As mentioned in the beginning of this session, we're live 3 days a week, Mondays, Wednesdays, and Thursdays at noon Eastern time for Ninjacators' new weekly live event, Profits at Noon. So, of course, we will be back in action tomorrow at noon Eastern time. However, I do have to note, since I will be driving and on the road, I am typically in charge of this YouTube simulcast. So the YouTube simulcast will likely not be in effect tomorrow. So if you do want to join Richard tomorrow for the final session of the week and you're over on YouTube, I do encourage you to grab that link in the description beneath this video, and it'll take you to a sign-up page where you can register and join in on Zoom. So Awesome. Well, I think that
Cool,
about
cool.
covers it.
Yeah.
Awesome stuff. Well, you're in good hand with Richard tomorrow. And as mentioned, feel free to contact support if anything else comes up. But beyond that, Richard, we'll see you tomorrow. I will see the rest of you next week. Thank you, Hal. Thank you so much. I appreciate that. I'll do my best not to have any road rage incidents and the inevitable traffic I'll face across those 12 hours, but much appreciated. So thank you all. Have a great rest of your week, and I will see you next week. Richard, we'll see you tomorrow. So goodbye,
Awesome.
everybody.
Cheers, Nate. Have a good trip, and thanks, everyone. We'll see you tomorrow.
Awesome. Thanks,
Bye-bye.
Richard. Bye-bye.
Cheers.